Today's highlights. Sundays are a retail investor carnival, while institutions start to make their moves on Mondays. What signals are there from Bitcoin's dual engines? Litecoin's ETF has been stalled due to the government shutdown. Is this a political tug-of-war or a covert regulatory battle? Today, we'll help you understand why Michael Saylor doesn't do mergers and acquisitions, but only accumulates coins. His accumulation strategy is actually the key for you. November 3rd, Monday, this is the BTB Chinese channel. Where is B-Face? I'm Michael, greeting everyone from Singapore. Let's first look at the most important crypto headlines from the past 24 hours, brought to you by NEXO. What is NEXO? It's a compliant Australian exchange where you can buy coins, earn money, borrow coins, and even spend. Scan the QR code on the screen to download NEXO. Not only can you get discounted transaction fees, but there's also a commission sharing feature, making your crypto journey safer, more efficient, and allowing for continuous growth. Alright, for today's headline, let's first focus on the past 6 months. Bitcoin's on-chain rhythm has become increasingly pronounced. It's almost as if the market is breathing on a weekly cycle. Data shows that Monday is the hottest day for transactions, averaging 440,000 transactions, slightly higher than Sunday's 433,000. So who's busy on Sundays? It's mostly retail investors making peer-to-peer transfers, with waves of regular investments and position increases. But come Monday, institutions open for business, funds are reallocated and settled, and all these operations happen on-chain, causing transaction volume to surge instantly. By Wednesday and Friday, the market cools down a bit to around 430,000 transactions, because the weekend is approaching and everyone needs to catch their breath. But on-chain data never really rests either, with at least 400,000 transactions, even at the lowest point. This shows that whether it's a bull or bear market, there's always activity on the Bitcoin blockchain. Judging from the current trend, retail investors and institutions have already become the twin engines driving the market. One is responsible for enthusiasm, while the other provides the firepower. So Bitcoin is transforming from a speculative toy into a global, institutionalized value network. Now, Bitcoin's price is becoming more and more stable. It's hard to push it down, and it's also hard to drive it up, so it's increasingly resembling a real economy. All right, today is Monday at 8 a.m., and in our weekly review, we've released an exclusive weekly analysis for our Gold members. We'll share our views and recommendations on Ethereum, Bitcoin, and Dogecoin. Let's take a look at Ethereum. Recently, the hype has cooled off a bit. As of October 30th, its market value to realized value ratio, the MVRV, has dropped from 1.85 in August to 1.5 now. What does this indicate? The market is starting to calm down, and the short-term window for getting rich quick has temporarily closed. Now, Ethereum is hovering around $3,700. So what is the average cost basis for Ethereum? It's about $2,560. According to historical experience, when the ratio is below 1, it's a buying opportunity, and when it's above 2.5, it's considered an overheated zone. Simply put, these three lines are very important. The first one, 2,560, is Ethereum's floor price. Most people will increase their positions here and won't sell. 3,840 is the current equilibrium point, where the market is mostly consolidating and gathering strength. The high point, 5,760, is the ceiling. At that point, everyone starts making money and sellers will hide, so Ethereum's price stays between these three lines, neither hot nor cold, quietly building momentum. According to past trends, this kind of MVLB 1.5 range is often when the main players are quietly making big moves. When on-chain capital starts moving again, the market could shift gears and take off at any moment. Now, let's take a look at Bitcoin, which is showing some similarities. So what about the steady players at the high end? The price is still hovering around 110,000, and on the surface, everything looks calm and peaceful. But on-chain indicators are already revealing a hint of coolness. According to data from Queen Glass, as of November 3rd, Bitcoin's current price is $114,270, and the 200-day dollar cost average is $109,380. So the Buffett indicator has now dropped to around 0.85. You know, not long ago it was still at 1.27, which was a signal to sell, but now it's back in the accumulation range. What does this mean? The market temperature has cooled down. According to historical patterns, when the Buffett indicator is below 0.45, it usually means the market is bottoming out. 0.45 to 1.2 is a period of consolidation and accumulation, while anything above 1.2 indicates overheating and you need to be cautious. So this current level of 0.85 falls into that middle category. It's a rational and relatively mild state. It's not too expensive, nor is it too risky. So for long-term investors, gradually investing and steadily building your position is the smartest and easiest choice. All right, please give us a like and turn on the notification bell. We're here to bring you the latest news from the Web3 world that's closest to making money. This month is also our anniversary month. As long as you join our Weibo or this YouTube channel's gold membership during this month, you can receive a cash rebate directly returned to you in USDT, as well as exclusive channel souvenirs. All the membership benefits are listed here. You can click to check them out. Let's take a look at the news. Right now in the US, everyone is looking forward to Crypto October. Historically, October has always been the best month for Bitcoin, with an average increase of 21%. So this month, Bitcoin's performance has been especially disappointing. Why did it suddenly stop working? There are two reasons. First, the US government shut down itself and hit the brakes, right? The SEC is now only able to maintain basic vital functions. No one is approving documents, no one is handling matters, and there are over 90 crypto ETFs. All of them are in a suspended standby state. The second reason is that the SEC suddenly announced a rule change requiring all applicants to switch to the new S-1 form. The previous 19B-4 documents are now completely obsolete, so everything has been thrown into chaos. It's a double chokehold from both the rule change and the government shutdown, so even the most anticipated Litecoin ETF can only wait anxiously at the door. To put it bluntly, it's not that the project itself is lacking this time, but rather that the system has hit the pause button.
Senate Majority Leader John Thune stated, "The deadlock in fiscal negotiations between the two US parties is gradually loosening. External political and market pressures are pushing the talks in a positive direction, and some centrist Democrats are signaling a willingness to compromise. There could be a breakthrough as early as the beginning of October."
So many headwinds are turning into tailwinds for crypto, especially with the idea that equity investors are starting to embrace digital assets in a big way. We've really started to see the inflows pour in, especially from the ETF perspective. The ETF inflows into the Bitcoin ETFs have now surpassed the amount that's come into the NASDAQ since its launch, which is pretty crazy to think about.
The regulated crypto market continues to heat up, with cumulative inflows of $61,300,000,000 and $13,400,000,000 into Bitcoin and Ethereum ETFs, respectively, indicating that institutional buying remains strong, Bloomberg analyst Eric Balhunas estimates. The probability of long-term approval for the Litecoin ETF is close to 100%. SEC Chairman Paul Atkins emphasized that the new standards will significantly lower the barriers for investors to enter the digital asset market, injecting more trust into the market. And choices?
So regarding Litecoin, the most anticipated ETF in October is currently stuck, and what this actually reflects is a fundamental restructuring of the US financial power system. The reason why the SEC suddenly changed the rules is to establish its supreme arbitration authority in digital asset regulation. As for why the ongoing fiscal tug-of-war in Congress keeps causing US government shutdowns, in fact, this is a war over who will dominate the future financial landscape. The Litecoin ETF is just the tip of the iceberg, but for the market, this kind of political and financial tug-of-war is anxiety-inducing in the short term. However, in the long run, this could be the US reshaping its financial structure. Once this regulatory framework is hammered out after all the back and forth, the threshold for institutional capital to enter will become clearer and lower. In other words, the temporary holdup of the Litecoin ETF might actually be the prelude to the next wave of major capital officially entering the market. So what about now? The Bitcoin treasury companies have launched a land grab, and it's getting more and more intense. The competition between companies isn't just about how much Bitcoin they hold, but also about their size and how much influence they have in the market. This September, as you know, Strive pulled off a big move by announcing an all-stock acquisition of its competitor, Similar Scientific. After the merger, the company held 11,006 Bitcoins, instantly ranking 12th among global Bitcoin holding companies. But even with Tesla in the game, strategy is still the king. Michael Saylor holds 640,000 Bitcoins, making him solidly number one in the world. However, when it comes to this merger, it seems like Michael Saylor isn't impressed.
At the third quarter earnings conference, Michael Saylor told investors that the company currently has no plans for any mergers or acquisitions, M&A, mainly due to potential risks and high uncertainty. He emphasized that strategy's consistent Bitcoin accumulation approach makes the company's financial situation more transparent and market evaluation more straightforward and confident, pointing out that these actions have contributed positively overall. Although mergers and acquisitions are not being considered in the short term, Saylor still leaves room for future strategic adjustments.
Michael Saylor is considered a hero in the crypto world, but when it comes to traditional financial rating agencies like S&P, they gave Strategy a must-reduce rating, which clearly means that this company is very risky and people shouldn't invest recklessly. What's even more outrageous is that even though Strategy holds a large amount of Bitcoin, S&P not only didn't give them extra credit for it, but actually deducted this portion from their equity. But in the face of negative evaluations, Ms. Su is not in a hurry. She said there are currently no plans for mergers and acquisitions, and she's only focused on two things: doing well in the core business and continuing to accumulate Bitcoin. So here's the question. How much longer do you think this Bitcoin hoarding race can last? This is a leap of faith, an all-in bet. Or do you think this will drive the arrival of the next bull market? The comment section is yours. Here, there are legends of getting rich overnight. There are also carefully woven scams. This is a dark forest of chaotic development, but it also nurtures the spark of hope leading to the light. The ultimate destination of faith is freedom. The end point of consensus is equality. BitcoinTV guiding you through the fog to see the future and helping us all get rich, slowly but surely. Even after shutting down 104 mining farms, Iran's mining chaos remains hard to eradicate. So when will we finally break through the mining deadlock? With 90% of AI computing power monopolized, what gives Nvidia the power to control the lifeblood of the global tech industry? Since the Chinese government banned all Bitcoin mining on September 24th, 2021, our mining operation in China was already quite sizable at that time. Some of our machines were sent to Iran, but they were completely wiped out. Another batch went to Russia, and they too were wiped out. But now, Iran's position can't be underestimated. According to the hash rate rankings, 4.2% of the world's Bitcoin hash rate is located within Iran's border. Iran ranks 5th in the world. The United States, on the other hand, holds about 44%. I still remember when Chinese miners were scattering everywhere. Elon Musk posted a tweet saying that the hash rate we cared so much about had made its way to the US on its own. So when you compare the two, the gap is truly massive. Now, so who comes after that? Kazakhstan, Russia, and Canada follow in order. But here's where the trouble starts. Mining in Iran is getting a bit chaotic. According to the data, there are about 420,000 mining machines across the country, and 95% of them are unregistered. What does that mean? It means they don't have licenses, and they're taking advantage of government-subsidized electricity prices, making Iranian miners feel like they're in paradise. But this has also turned into a regulatory nightmare.
Illegal mining machines are a black hole in Iran's power system. They run non-stop, using over 1,400 megawatts of electricity daily. Many miners disguise themselves as industrial sites to get government subsidies, and breaking electricity laws has very little cost. To curb this chaos, the authorities have stepped up their crackdown. In Tehran province alone, 104 illegal mining farms have been shut down, and 1,465 machines have been seized, consuming as much electricity as 10,000 households. The government is also conducting inspections in key areas such as Pakdasht and Malad, and has even discovered some mining farms hidden in underground tunnels, using factory subsidies and shops to evade supervision.
It all started in 2018 when the United States reimposed crippling sanctions on Iran, targeting its oil industry and cutting it off from the global banking system. Without access to banking networks like SWIFT, Iran couldn't easily conduct international trade, leaving it financially strangled. The government needed a way to get its hands on foreign currency to pay for imports, and it needed a way to do it that was outside of the control of the US, and that's where Bitcoin came in.
So what's the problem? In 2024, the central bank issued a regulation aimed at shutting down these illegal mining operations. But as everyone knows, corruption in Iran is rotten to the core. 95% of the mining operations are still running under the guise of regulatory compliance. So up to now, mining in Iran is all about who has the guts. Now the Iranian government has come up with an even more ruthless tactic, offering rewards for reporting. If you report a mining machine, you get a $24 reward. And what happened? Reports started pouring in like snowflakes, but then who is actually going to handle all these reports? This is another issue of government administration, or rather efficiency. The problem with mining in Iran is that the power grid has few old facilities, water is scarce, and there's a power shortage of 18,000 megawatts. That's why the Flip mining farm, which our channel collaborates with, is likely the largest single mining farm in Central Asia. But once the mining industry is saturated, we won't expand further in Central Asia. We'll move to the United States. For the next 3.5 years, we have to align ourselves with Trump, operate in the US, and work through publicly listed companies, leveraging the power of capital. That's why we hope to become a guide for small and medium-sized miners, as well as individual miners in the mining industry. We want everyone to be able to share in the dividends of the mining industry. Take a look at Nvidia. Nvidia has absolutely shattered the ceiling. It's now the world's first company with a market value exceeding $500 billion. Just think about it. Since ChatGPT became popular, its stock price has skyrocketed 12-fold. Its entire valuation is even bigger than the whole crypto industry, so Nvidia is now like the Federal Reserve of the AI world. Everyone probably knows the inside story. The current king of AI actually made its comeback thanks to Bitcoin. As you know, Nvidia started out in 1993 making GPUs for gaming, but later on, the gaming market cooled down. Nvidia was on the verge of starving, but then, starting from the 2017 crypto bull market, miners went crazy snatching up graphics cards to mine Ethereum, right? Nvidia was instantly revived on the spot. So that's how life is. Sometimes the one who defeats you isn't your competitor, and the one who saves you might be someone you look down on or could never have imagined.
If you're not engaging with AI actively and aggressively, you're doing it wrong. You're not going to lose your job to AI. You're going to lose your job to someone who uses AI. Your company isn't going to go out of business because of AI. Your company is going to go out of business because another company used AI. There's no doubt about that. So you have to start engaging with AI as quickly as possible.
At the end of 2020, the mining boom surged, and Nvidia's RTX 30 series graphics cards sold out. The RTX 3060 price was 2,499 yuan, but speculated up to 5,499 yuan. In 2021, mining graphics cards made up a quarter of shipments. Revenue soared by 61% to $26.9 billion, but mining brought hidden risks. The conflict between gamers and miners intensified, and the computing power restrictions were cracked. The dedicated CMP mining chips were ignored due to their low residual value. In 2021, China cracked down hard on mining, and after Ethereum switched to POS in 2022, GPU mining came to an end, causing Nvidia's revenue to drop by 17%. The stock price was cut in half, and they were fined $5.5 million by the SEC, so they decided to sever ties with the crypto industry.
Jensen Huang said that in the next quarter, there are still $50 billion worth of orders on the way, so Nvidia is feeling very confident. People keep saying that its stock price is a bubble, but how much of a bubble is there? I'd like everyone to vote. Feel free to comment in the comment section about what price you think would make Nvidia's stock worth buying. During this process, Nvidia was once so spooked by DeepSeek's cheap models that its stock price dropped by 17%, right? But ironically, these low-cost competitors actually made more companies see the potential of AI, and the demand for computing power became even stronger. So by selling graphics cards, Nvidia has reached the pinnacle of its existence. It's like a business fantasy movie on Earth. All right, time to run.
Recently, Polymarket data exploded again. The odds of Zhao Changpeng returning to Venus this year have dropped to just 12%. This shows that market confidence has clearly cooled off, and people in the crypto community are now betting that he'll just stay comfortably as a behind-the-scenes boss. Recently, Musk has been up to something new. This time, he set his sights on autonomous driving. He says cars can drive themselves, but the system must be open source and auditable. Otherwise, who would dare to entrust their life to a black box? Netizens joke that now even autonomous driving will have to run on the blockchain. Sam Altman responded to Musk directly. Bro, the organization I saved back then is now the world's largest nonprofit, and you still wanted Tesla to buy it. How would that be nonprofit? Now you have an AI company, and so do I, so let's just stop competing. Musk is stirring things up again. In his blog, he said that in 5 or 6 years, the phone in your hand might become a relic, and even apps will be replaced by AI. By then, all the content you see will be generated by AI. In the future, it won't be you scrolling on your phone, but AI doing it for you. Meanwhile, El Salvador has been quietly accumulating more Bitcoin. In the past 7 days, they've added another 6 Bitcoins, bringing their total holdings to 6,367.18 coins, with a market value of about $703 million. Netizens are joking about the president, saying he's really treating the national treasury like a cold wallet.
Let me elaborate on this. Gang once said something that really makes sense. He said, how do you tell if someone is a good person or a bad one? He said, wise people value sincerity, petty people play mind games, kind people keep to themselves, and evil people flock together. That really resonates with me, because in this society, there's never a shortage of people who can talk a good game. What are we really lacking? People who are willing to speak well of you behind your back are truly rare. Don't be fooled by someone's popularity. We all know that being well liked doesn't necessarily mean someone has good character. More often, it just means they're socially adept and know how to please everyone without offending anyone. Truly sincere people tend to have small circles because they disdain playing social games. On the other hand, those who are fake are always surrounded by drinking buddies and a lively crowd. Remember this, the more fake a person is, the more friends they have. The more genuine a person is, the smaller their circle. The more straightforward someone is, the more easily they're misunderstood. And the more hypocritical someone is, the better they are at getting along with everyone. So don't be afraid of loneliness. It's often the standard for those who are clear-minded. Instead of trying to please others, it's better to just be yourself. Alright, that's all for today's program. We hope that our daily news summaries can help you have a clear understanding and make rational decisions as you enter Web 3. All membership benefits are included, and if you join this month, there are rebates and gifts. We hope to lead everyone through this bull market. Let's hustle together and gradually become wealthy. See you tomorrow.